you want to pay 75% in taxes, or do you want to pay 17% in taxes? I just got this report from Vanguard, the BETR, the Better Approach to Roth Conversions. I mean, it's a lovely piece of work. And I know a lot of folks are out there talking break-even tax rates and break-even tax rates. They're all very selfish tax rates. I mean, unless you have nobody in the world you care about, this doesn't mean anything if you don't use the family tax rate. What is it? The family tax rate is the rate of the retiree, including all their tax on their requirement of distributions and their Medicare IRMA tax and all that baloney, right? And then the tax on the inheritors, which are the kids. And I'll use my own family as an example. I have a son, I have a daughter, we have IRA. If I'm paying 30% in taxes, because, I live in a state with state and federal taxes and, income and retirement and all baloney. If I pay 30 and they pay 42, that's 72% in taxes. I don't care how you slice it. There's a family tax rate and there's a selfish tax rate. Now, if you do all your Roth conversions just based on yourself, okay, that's great. I think there's a lot of people don't have anybody in the world. And if you leave all your money to charity, there is no tax. That's okay. That's fine. We have folks who do that. But if you're a regular working family and you've got kids and you've got grandkids, you need to look at the family tax rate. That's the tax rate of the retirees during their entire retirement life. And then the tax rate of the children, especially if you're leaving money to them that's in trust, which accelerates the tax rate to the maximum at $16,000 a year. So we've done a lot of talking about this in public meetings and writing. You can download our Smart Financial Roth Magic Tricks ebook that we have online that you can get just by subscribing. Hit the link below, ask for the Roth Magic Tricks ebook, and we'll get that right out to you. There's 10 ways that people do these things. There's a lot of reasons that people do Roth conversions, and there's a lot of reasons why. Right now, we're in a window, I'd say, between 2026 and 2029. Who knows what the future holds, but we kind of know what tax rates are now. We know what the incentives are for seniors. We know what the incentives are for doing monster backdoor Roth conversion bonus programs and all that. If you're a person, again, between, say, 55 and 75, this is the time to think about this. The sweet spot, actually, to do a Roth conversion might be around 60, because you can get the Roth conversion done, have 1 year of large income, and then when Medicare kicks in at 65, you don't have to deal with IRMA, because IRMA can be $200,000 in your retirement. I mean, we've seen it. So let's take care of really figuring out your Roth conversion options by getting a copy of our ebook, getting a Roth conversion analysis done. You can't do anything until you do a Roth conversion analysis and see what your situation is. Reach out to us online, attend to one of our public meetings, sign up for our free Roth conversion. We have a 20-minute coaching call. Leave us a comment on the link below. Go ahead and send this to any of your friends that are like over 60 years old that are in this zone. And let's do your full family tax rate calculation, not just the selfish rate, the rate for you and your kids together. I'll see you again next time on Smart Financial. Knowing your full family tax rate, that's just part of the art of being smart.